Well, hello, Mavericks. It is May 23rd. Let's jump into the market roundup and see what happened today. It was a nice up day for the bulls. So let's take a look at the markets here. Dow Jones up 2%, S&P almost up 2%, NASDAQ was the laggard and was actually lagging most of the day. And I feel like tech wanted to be weak, especially in the morning. And the S&P and the Dow were so strong that NASDAQ actually went negative at one point. While the whole time the S&P went down maybe 0.25%. And I feel like that strength in the S&P really encouraged the buyers to come back into tech. And in the end, tech had a decent day. But you can see tech and small caps underperformed. Commodities were pretty much flat here. So let's really take a look at what happened. It was a follow-through of Friday's rally. And we did get JP Morgan with its biggest gain in 18 months. The financial sector, it was a really strong sector. If we take a look at this S&P chart, we talked over the weekend in our trading room session that we saw this pierce. And we talked about the piercing of the lows. And when you pierce through lows and then you recover, that's a really good sign that that was not a true breakdown. And we're probably, we said, going to trade up to around the 410 area on the SPY. Now, look, we are not like Super Bulls at all at this point. It's just the market got so deeply oversold that we think that there is a rally. There was a rally somewhere around here. And sure enough, we've gotten now really 3 days of buying. Now, look, you could take a look at Friday and say, okay, that wasn't a day of buying. But if we come over to tech, you can see that tech had an even better candle there, a little hammer candle here on Friday. And so we got a little follow through today. Look, this is not looking all that strong. We talked about the NASDAQ probably underperforming, maybe up to 307, 310, I think is what we called as probably the top. So short term, we are bullish, and I mean super short term, meaning the next few days. After that, we are still bearish the markets. We take a look at the heat map. You can see that the heat map was nothing but green. Nothing but green in there. A few standouts. Avago, actually, they were possibly buying out Electronic Arts, so they went down. AbbVie had some news against it, but other than that, just a sea of green out there. And we had, I think it was about 65% of stocks go higher today. However, there's still a vast majority of the market is trading significantly below their 50-period moving average, which is really the line in the sand for us as far as what's in a bull market and what's in a bear market. So our outlook this week was, again, -3 for the monthly outlook. Now, to clarify what this means is that, okay, when you're looking out a month of time, like where do you think the market's likely to be? And -3 means it's probably the most bearish that we can possibly get. Now, again, this is not our opinion. This is technicals. As you can see, we have a +2 for the week. So we think there's going to be a bounce this week, and a fairly significant one. But the question is, where's the market going to be 30 days from now? Well, the technicals are all negative, and they've been negative really since April. When it broke down here, we went to a -3 back here. And other than a couple little rallies here and there, it's been mostly down. At some point, this market will stop going down and will start to go back up again. But until we see the technicals, we do not take a guess. So short term, we think there's a rally coming. And again, this was part of the rally that we thought was coming today. But ultimately, we do believe that we are still in a bear market, and you want to be more of a seller of rallies than a buyer of rallies. However, we do think there is still some upside left, as I talked earlier, possibly up to 410 on the SPYs. So let's take a look at some potential trades here. Now, when we're looking at potential bullish trades, we need to realize that the market right now, right here, right now, is more bullish than bearish. 3 days ago, it was the exact opposite. It was way more bearish than bullish. So whenever we make a trade, we really have to think about time frame. Meaning, okay, I'm going to take a position here that's bullish, but if I think the market's only going to go up for maybe another week, maybe I need to shorten up my time frame on bullish trades. And if I think we might get a rally and then fall apart over the next 30 days, maybe I need to be a little bit longer on my bearish trades. So we're definitely going to be making those adjustments, taking a look at shorter term stuff. But what we really wanted to focus in were the things that were already strong. And so these are going to be the winners in this market, the things that were already strong. Now, yes, the things that were very weak, they've had some nice bounces, but what you want is you want to find the ones that didn't go down when the market was horrible and are going up when the market's good. And this here is Lithium America. There are lithium miners. We're getting a nice breakout to this upside here. It's been strong. Someone forgot to tell this stock that this market is in a massive bear market because since March, it's significantly higher. One of the few stocks you could say that about. So 30 is going to be our short-term target here. I think there's lots of trades you could do. I like the 28-30 diagonal call spread. So go out to the June expiration, sell this week's 30. So buy the June 28 and sell this week's 30. That's going to give you a nice little profit area to where as long as it stays strong, then we're going to make a little bit of money. Now look, if this thing takes off and runs up to 35, yeah, we left some money on the table. But look, we're not trying to catch big winners here. We're trying to catch just good, consistent gains while this market is bouncing. So I really like this one and probably take it all down by Friday for a gain if it is anywhere above the 29.50 area. Also on the bullish side, this is Zim Shipping. Now look, this is a stock I have never traded ZIM before. This is why I love using screeners. At Maverick, we tell our traders, throw away your watch list. That is how you traded 20 years ago, where you had a watch list of stocks that you watched, and every now and then you added a new one on and kicked an old one off. That is 2000 trading. Now we have scanners. We just simply put in the parameters. Okay, what do we want to see right here? Give me all the stocks trading above a 50-day moving average. And I sorted them by performance over the past month. And this one popped up and I said, oh, this one looks really good here. We're now breaking out of some pretty key levels here. And really the next bit of resistance up here is just 75. Now that is a little bit more aggressive than I want to be here, in the fact that I'm just not all that bullish in the market. So when I make my bullish trades, I'm going to look at things, okay, what can I do that's not as bullish? This is where I could easily pull out diagonal call spread, do something like the 65.70. And that's going to be pretty much at the money, but I'll probably be able to buy that for about $3.70. It's going to give me $1.30, $1.40 of upside if it does blow past that 70. And as long as it stays between like 67 to 70, I'm going to be nice and profitable in this area. So ZIM, if you want to be a little bit more directional, I would be just straight long calls and just get out when the momentum's done. And I think we're going to get up to 75 here in the next week or so. NTES was a stock that we talked about over the weekend. We like how well this one's held up as well. Look, it did have the little moment here, and this was really when the Chinese internet stocks were getting absolutely obliterated. There was one day where the Chinese internet ETF, KWEB, was down 25%. When an ETF goes down 25%, that is just an absolute killing. Now, it all bounced back, but not like NTES bounced back. And you can see here, especially over the past month where we've had intense selling in the market, this thing has not really participated in the selling. So now the market is starting to turn. We're starting to get some movement above this trend line. Now, I was hoping that today's candle was a little bit better. Today's candle was very disappointing. However, by the end of the day, it had come back up and closed where it opened. This stock does have earnings tomorrow night. So I'm going to caution everyone, if you don't know how to play earnings, then don't play it until earnings are out and we'll see what happens. If you're comfortable playing earnings, I love to play earnings with just a straight up vertical spread, 95-100. It's going to cost me about $2.20. I'm probably going to have about $2.80 of potential upside. Again, we love these because this is how we can control our risk. If there's horrible news and NTES gaps down to 70, guess what? It doesn't matter. We quantified our risk, $2.20. If it jumps up to 105 and runs or stays there, look, we've quantified it. This is a very, very controlled trade. We know exactly what we're going to get. We don't know what we're going to get, but we know Wherever it goes, this is our risk, this is our reward. And it's a very controlled trade going into an earnings report. So NTES tomorrow after the bell. This is another one we talked about over the weekend, FBP. We talked about this one as a sideways trade. This is in the financial sector, and you can see it gapped up, went up a little bit today, went down a little bit. But at the end of the day, we just closed right here. We talked about doing the 14 butterfly. So the 14 butterfly was the call, and you can see this is where we think it's going to stay pinned. Somewhere in this area, we think it's going to be trading between 1350 and 1450 for the foreseeable future. On the downside, we have TripAdvisor. Now, TripAdvisor has been working its way lower, and all we've seen is rallies that fail and rallies that fail. We had a few little moments here where we poked our head up above the 50-day moving average, but it just went right back down underneath. And lately, it's been really struggling. This is a nasty candle on a really strong up day. We were down 4.5% on a day where pretty much every stock went up, and this thing was just a dog. I don't think it's going to go down to this 21. That's way too aggressive on the bear side. I think, again, this market is going to bounce for the next couple days to a week or so, which will help hold things up. So I like the just straight up 23-24 bear call spread. It's going to be a 50-50, 1-to-1 trade. So again, your odds are going to be 50% and your win-loss is going to be 1-to-1. It's as basic of a trade as you could possibly make. What you're saying is, I'm counting on my skill to be better than flipping a coin. And again, we've got lots of good things working in our favor on the bearish side. We do think the market is going to turn bearish again at this point, and this stock has shown that it cannot go higher on a bullish day. It's a really good sign here to enter a bearish trade. Let's wrap this up. So tomorrow's outlook, I think this rally does have some legs to it. I think we've got at least a couple more days to a week or so in it. However, we just went up 2% in one day. The most common candle you get after a big move is a harami candle. Again, this is a Japanese candlestick pattern, and harami means pregnant or expecting. So when you get a big up day, the most likely candle you get is something like this. This is an example of a harami candle. Something in the top 50% of that last candle, and it can poke its head above, but it's just not a very big candle. It's a smaller candle after this expanded range candle. This is likely what we're going to get. We have no idea. We'll have to see what the market gives us, but it's usually the day after the harami that tells us, is this move that just happened, is it going to stick? So I think we get a harami tomorrow, and then probably on Wednesday, we get another move higher to finish up this rally. But we'll see. This is just projections. We are looking for a short-term rally, but we are still in a bear market. New home sales tomorrow, and Powell speaks. It's not a very important speech, so I don't think you need to worry about it. And then there were actually some notable earnings on the report, so make sure you check those out. Make sure you're always aware of earnings when they come out so you can make sure that you are in a defined risk trade. That is a market roundup. Thanks for joining me. Goodbye, everyone.